Hello, everyone. Good afternoon, and welcome to A Bank Success Story, how Berkshire Bank strengthens community impact with a digitally focused strategy. I'm Naomi Snyder, Editor-in-Chief at Bank Director, and we thank you for joining us today. Today's webinar is brought to you by Bank Director and sponsored by NARMI. Before we get started, let me just share a few housekeeping items. You've joined this event in listen-only mode, so you are automatically muted. For a better viewing experience, we recommend that you click on the slide bar at the bottom of the screen and put the presenters into full screen mode. We encourage you to ask questions, so please note them by clicking the Q&A button found on the right-hand side of your screen. There is no need to take detailed notes. The recording will be shared with all attendees within 24 hours via email and will be available on bankdirector.com. If you have any technical issues, just note those under the moderator chat feature on the right-hand side of your screen, and we'll do our best to take care of it. On that note, let me introduce our speakers today. Lucy Bellomia is Head of Retail Banking at Berkshire Bank. She has over 20 years of experience in the financial industry, most recently as a senior executive in the Northeast region for Bank of America. Nikhil Lakhanpal is the co-founder of NARMI, a New York City-based financial technology firm that builds enterprise solutions in digital banking. He has long had a passion for technology and financial services as the former CEO of a financial institution and an investment banker at Citigroup. And Jason White is Chief Information Officer at Berkshire Bank. So Nikhil, Lucy, and Jason, please take it away.
Thanks, Naomi. Can you hear me okay, Jason and Lucy?
I can.
All right. Well, welcome everyone. Happy December. I can't believe it. And I hope everyone's had as well of a year as you could have and enjoying the holiday season. My name's Nikhil Lakhanpal, like Naomi mentioned. I'm one of the co-founders here at a financial technology company called NARMI. We are headquartered out of New York City, right here in Manhattan. And continue to be super humbled by the Berkshire Bank team and how generous they are with their time to the greater financial institution community. And Jason and Lucy, today's no exception. The theme of today, if I'm thinking about the theme, and I think NARMI is now approaching a 6-year-old company almost. I don't think we're really spending a lot of time convincing banks and credit unions that they need to be more digital. And that was the case about 5 years ago. Like, it was still very much like, why is an investment in digital technology better for your long-term growth than more physical or than more, than the core, for example? I do think we've gotten to a point as an industry where we're good. I think it's there. The ROI makes sense. We now think of digital as a investment rather than a cost center. So these are all amazing, amazing tailwinds in our industry that a lot of our financial institution customers and obviously our company internally are working very, very hard to achieve. But it's that last part of achievement that is really important. And that's what I really want to spend the next 30, 45 minutes on today is how do we really achieve it? And again, like I said, we couldn't have had two better people on the call today. And so this purpose of this is we kind of broke it up into threefold. One is, what is stopping banks from really just getting this done? Like, what are the obstacles in their way? Number two is where to start. A lot of this audience is on different paths of digital transformation, different paths of their journey. Some are very far into it. Some are very far into it but don't like where they are. Some are very far into it and love where they are. Some haven't started. And I would assume a lot of you are right in the middle or towards the beginning stages of it. And then three, that last part is how to actually execute. Like, what are the things a bank has to think through? Lucy and Jason have said they're willing to share as much as they can. Obviously, not going to share all the secret sauce. But that's the point of this webinar. Please do participate in Q&A. We'd love to hear from you as well. But getting right into it, Jason, I'll start with you. Like I said, FIs want to be digital. Like I think that is a very okay thing to say here in December 2021. But what are those common roadblocks? What's stopping them from making that assessment at the board level, at the C-suite level, at the management level, but then implementing it? I mean, every bank's different to a certain degree, but if you think about, you've worked at multiple banks too. What has typically gotten in the way there? And I think that'd be great for all of us to hear.
I'd say to start with, defining what it means to digitally transform in your financial institution. Every FI has a different terminology and a different definition of what it is to digitally transform. I'll share a little bit of ours, and we can always go back to these pillars that we created when we're digitally transforming, making sure strategy aligns, it hits what we're looking for, and it really makes that impact in our FI and in our community. So our first pillar would be enhancing the customer experience and customer-facing digital solutions by introducing new fintech solutions such as Narmi, introducing niche platforms, more as a service, digitizing our human touch and product offerings, and enhancing our current digital solutions and product offerings. That's kind of the most common one that you'll see. Throw digital in, let's make our customer experience better and enhance our digital footprint. Then we're looking at creating an ecosystem of customer seamless journeys across all channels of our institution, our contact center, our branches, our My Bankers, our RMs, and the new digital channel. Create that seamless journey and define that seamless journey. Digitally enhance our already strong personal customer relationships. Since we're a community bank, we thrive on those by offering those digital elements for self-service capabilities and ensure we're giving our customers what they need to bridge the gap between human and digital. And lastly, optimize, digitize, and enhance our internal workflows. A lot of companies or FIs or anyone that's digitally transforming, I'll talk a little bit more later on some of those challenges, but we often forget about the operational component of it when we're looking at a new fintech or a new solution and looking at impact. And to help with some of that, we've defined current state, future state process mappings, introduced automation opportunities in the back end, consolidated a lot of these admin portals. When you're looking to partner with multiple fintechs, multiple digital solutions, your back office and your operations staff are going to go into 6, 7, 9, 10 different portals. How do we make that easier? How do we pull that all together into one portal? So those are kind of our 4 pillars that we're working on and how we define digital strategy. Most of them will carry over in most of the FIs.
Yeah, and again, very generous. And that Berkshire has actually taken it to a whole nother level. And you've publicly published these. Even now, Berkshire's a publicly traded company. You've announced it to the street. It's coined the best plan. I would encourage all the attendees to look at Berkshire's press releases. Their entire C-suite and their CEO has really said, this is our plan for the next, 1, 2, 3 years. A lot of it's centered on technology. Was that like a pretty conscious choice to be so transparent, both to your, customer community, your investor community, your vendor community, your partnership? Like, I'm sure that was, not every bank is doing that. So I'm curious why did Berkshire feel the need to also share that publicly?
I'll start, Lucy, if you want to join in after, but we wanted to show that we are truly digitally transforming. I know we hit strategy a bit, and I'll talk some strategic things later on in the presentation. But we wanted to show, you're right, our stakeholders, our community, in more than just digital, that we're transforming the full bank, and we want everybody to come along on our journey with us. We're going to show those successes, and we're going to map out those milestones and show when we succeed. So yes, it was definitely our CEO actually took that to heart.
And I will add to that there was a need of transparency, so that was addressed with making our plans very public, so that our stakeholders have a full view of where we're going as a bank. So as Jason specified before, that has been our plan all along.
For sure. And sticking with you, Lucy, you've been at your career is amazing. So, but maybe to zoom in on that, you've been at very impressive banks. obviously Berkshire, and then Santander, I believe B of A, if I'm not mistaken, and PNC Bank, going off memory. Um, so there's a couple angles here, right? Like on one side, I do think as an industry, I do think as a consumer base in the United States, we look at those larger institutions as examples of superior technology. Like it's like they have demonstrated the capacity to innovate, but at the same time, one would think they have such large IT budgets. They have all the resources in the world. Why aren't they further along than maybe they should be? It's kind of this catch-22. We won't get into that. Maybe we'll save that for another webinar. But I am curious, given you were at these very, very large banks and now you're at, a $13-14 billion community bank. What are some of the things those larger institutions have done correctly and really you're trying to apply to Berkshire potentially? And what are the things you saw that they maybe struggled with? And the spirit of this last part of the question is not to say those banks are bad. It's more to say, when you get to that scale, what do they struggle with, where maybe as a more regional community bank, we can move a little faster. Because most of the audience today is more the regional community players.
And so, Nikhil, generally speaking, so I've been in very large institutions and I've been in smaller institutions. We're not going to dwell on the superiority of the technology of Bank of America, for example, non-fact. So generally speaking, the planning and the project management in the larger institution is impeccable, as well as the small-scale rollout, with pilot program, and when it comes to the implementation, they do that very, very well. The struggles usually have been in the larger rollout, the implementation with the larger group, with poor communication in a lot of cases, or rushed communication, the lack of ability to foresee technology issues that may arise and have an organized plan to address it, and most important, the overall buy-in from the front lines on the relevance of this transformation, or this new digital enhancement to the client and to themselves as employees. So those are the things that I took away from my experiences, and the importance of transparency and communication to the front lines. We absolutely need their buy-in in understanding why is digital so important to the client, what is the benefit to them as employees, what is the benefit to the client, and how we can together transform the bank to be a top bank and service and really enhance the services we are offering to our client without taking away from the branch in itself. Although, of course, just like any other branch, any other bank, we optimizing our branch layouts and situations, but really to make it an exciting movement rather than a threatening movement, in the front lines. Did that answer your question, Nikhil?
I think that was pure gold there, and I've been jotting down notes. So just to summarize for the audience, I do think, and I do see this with some of the institutions we talk to, where you often, so it's interesting, right? Where I don't think a 2-year, 3-year project at these larger institutions, Lucy, I think that's almost like the normal. Is that right? Like it's not, there's no such thing as 6 months, right? So I think that's a really interesting thing, where 6-9 months at a community FI should be the normal, right? Because if we're taking 2 or 3 years as a community FI, our size isn't playing to our advantage. It's actually, we're equivalent to the mega banks. Okay. But then on the flip side, mega banks have the luxury of these 2 to 3 year implementations. So quick pilots, test cases become a lot easier. Like you could be in month 19 on a pilot out of a 37-month project, and you're on track. So, maybe one lesson I would urge you, the other bankers on the call would be, as you're thinking about your 2022 plan, your 2023 plans, how do you, potentially add a pilot phase or add a friends and family round or add some sort of like proof of concept that doesn't also extend that project life cycle 12, 18, 24 months. Because then I think you've defeated the purpose of embarking on that project anyway. So yeah, I think a lot of great stuff in there, Lucy, and definitely excited to learn more. Maybe Jason, back to you just for a second. And I'm still kind of on this what's stopping FIs, but slowly starting to get into where to start. Can you just talk a little bit more about like the planning process? So let's say there's a CTO or a chief digital officer or a CEO, or really it doesn't even have to be like VP of digital banking operations specialist, and they know they want to go towards a digital first growth strategy, digital first revenue model over the next decade, right? Should they go lock themselves in their conference room for a week, for 4 months, for a year? Who should they bring into that? Should they bring in all stakeholders? Should it be a very narrow set of stakeholders and then they should decide and then they should tell the FI? You know, again, I'm not looking for anything secret here, but I do think, I think the where to start question is very top of mind for a lot of bankers. So, you know, Jason and Lucy, any guidance on that would be appreciated.
Jason, you want to go first? Go ahead.
Yeah, I can start out with that and maybe come at it from where we've been and how, just because I feel like what we've been through has led us on a path of success. We have tangible milestones. We're hitting those milestones, and it's worked for us. So we actually started out, and it's not a traditional strategic meeting where in the past you're used to going out for a week or so, and sitting in a room, just like Nikhil said. It was months, 1, 2, 3 months of meeting on the executive level, taking that back and hitting. So from my perspective, working with my team, bringing our ideations up, reporting those at the executive level. It was very collaborative. We had manager and senior manager and executive level buy-in and build. And that's worked really, really well here. Typically what you'd see is, again, back to what Nikhil said, was lock yourself in a room for 8 hours a day for 3 days and boom, we have a plan. Now, we also went through the full transformation plan. So ours was a little different of a route. We wanted to fully transform, not just digitally transform. I'd say 80% of our transformation as a whole relies on digital, whether it's an enabler or some of the work streams strictly to digital. And I can hit more on those later and what those are if time permits. Hopefully that helps out.
Yeah, and I'll add to that just like Jason did with his team, each executive did with their team. So the executive group really set out some to understand what were the milestones that we needed to reach in order for us to be successful. And then each executive went down to the team and it involved each stakeholder in each department to understand what it would take to get to that milestone. And groups were formed specifically with the objective to achieve some of the pieces of that milestone, so that all together at the end can bring that milestone to life. So it was a complex but very linear organization of how to deliver this each piece of the project with the idea of the best plan in place.
Wonderful. Now, obviously this scales with your asset size, but what's the role of consultants in this journey, right? There's a lot of digital consultants. There's a lot of digital transformation consultants. I personally believe that your vendor partner should be that consultant and should also guide you along that journey. But that I'm a little biased there. But I'm talking about like a real consultant, whether that's as large as Accenture. There are a few, specific to the banking industry as well. Capstone, I believe, is another one we've worked with. how should a banker think about hiring that consultant, and should they come in on the strategic plan? Should they come in on the actual implementation of the project? I know it's not right for everyone too, so maybe it's a cultural thing, but I'm sure, Luce, both of you have your fair share of experiences working with consultants and it working out good and not it working out not so good. So would you be willing to share your experiences there or any advice you have?
Yeah, I think
Sure.
we built our plan um, together. We built it from the experience on the executive level and from the experience of those in the bank. Not saying that's right or wrong. It's worked out really well. We did pull in, and we do pull in validation uh, consultants, I would say, to make sure we're hitting those milestones, that we're on the right track. But the build of the plan itself was done by us, and I think that helped a lot with the buy-in because that's one of the kind of struggle points is the buy-in and um, by your staff all the way down. We took an approach of bottom up and top down. We wanted everyone involved, understand the plan, be building the plan, so that they felt they're part owners of it, and that did work out really well for us. As far as when we're looking to take components of the plan itself and digitize some of those components, we're a low code, low dev shop, so we do rely on our fintech partners to help with some of that stuff. We do augment a lot of our and extend our staff with different consultants that are out there from an implementation perspective. We're rolling at a pretty fast level, so we want to make sure that without hiring on that experience, we can still reach those goals and report those goals out.
Yes, and we have worked very closely with our vendors. And Nikhil, to your point, as you go through a digital transformation, as you go through the roadmap, you will uncover situations and perhaps struggles that you had not anticipated. And so our vendors have been key for us to help us address some of those struggles, perhaps with ideas, perhaps with consultations, and help us through resolutions, which has been a great result of walking through this path.
Yeah, thank you both for that. I know that was a little off script. So the next part of, and I think we're firmly in I think we talked about, what's stopping FIs and, and now we're in the more where to start and how you actually lay the groundwork. I love this quote, 90% of it is all in the preparation and then 10% in the execution. And I think I saw a lot of those themes here. But the last part of this is how to prepare your internal teams, right? I mean, both of you are on the C-suite of Berkshire Bank. There are probably hundreds of employees that roll up to both of you. How do you buy internal morale? Because at the end of the day, this is going to any bank that embarks on change, it's going to cause pain. I mean, it just is. It's like a fact, and it's not a good experience. I mean, we always try to minimize that, but it's gonna induce some pain. So how do you really motivate internally? And I think this is almost like a business question rather than a bank being digital. I think this applies to any C-suite or leader, is how to motivate the troops. But specific to this, specific to banking and digital movement, what's any advice for the bankers on the phone, like how to get internal buy-in to ensure successful rollout of whatever the project may be? Maybe some back-end change, maybe a core banking change, maybe a front-end change, maybe a payment processing change. I don't think it really matters. But I'm sure both of you have plenty of experience here.
Lucy, I'll start and you can chime
Go ahead.
in.
Go ahead.
Just because I'm running through some of this right now, we're constantly digitally changing and adding new solutions. So I am going through this right now. The bank is going through this right now. I think one of the key things we did was build a transformation office to help with all of this happening. And part of the role of a transformation office is to communicate with our employees. We had a town hall that we were on last week, I think, Lucy. I talked to pretty much the same thing here in more detail, different audience, but to have them understand the impact and their role in the transformation, the digital transformation. We have strategic seminars that just spun up, which allows the employees to come in and learn more. So a lot of it is inclusion, communication, and things of that nature.
Yeah, and so even with that, right at the beginning, we noticed a little gap within our communication. So, and again, as you go through a digital transformation or a transformation in general, as you go walk through the path, you will find some of your own gaps. So for us, it's been very important to get out to the front lines and really understand what were their feelings and their thoughts around what we were doing. And as we were gathering feedback, we increased our communication and explanation of what was taking place, why, what was the objective, where we were going with this. And then we pulled stakeholders from each group, whether it was back office or front lines, for them to be their champions and to be our champions and really continue the communications or bubble up issues and concerns so that we can address as quickly as possible. We went from a quarterly town hall, which we continue to have, to monthly calls and weekly communication for us to continue to keep our front lines well informed of where we're going, what we're doing, so that they understand what is taking place. They can also relay that information to their clients, and that builds a confidence in the front lines in really being able to answer questions and feel good about the strength of the bank as we're moving forward.
Yeah, amazing. Great. So again, where have we gone so far in this webinar? We've talked about and just so everyone knows, our content marketing team does a great job of summarizing these webinars and posting them to our website. So I promise for perpetuity, you'll have an executive summary of everything Lucy and Jason have said in perpetuity. So we talked about what's stopping FIs. We talked a lot about the preparation, the knowing where you want to go before you even start going on it. We talked about, how to start. Do you engage a consultant? Do you not engage a consultant? Do you actually, how do you motivate the internal team to go through this journey with you? Do you establish a transformation office? Do you do town halls? But now, the last part before we get into Q&A is, the execution. And I know it's easy to say 90% is in the prep, 10% is in the execution. I'm sure there are a lot of execution-minded people on the call, and it is very, very hard work. So I don't want to downplay it, and it is very important. So maybe I'll just leave this with both of you. So let's say where you want to go, like you want to. Let's just make up a strategy, right? You want to reduce branches by 30% in 3 years. You want the primary channel you're opening accounts, 80% of that to be digital. You want all, organic deposit growth to lean towards mobile online. And you want to have, best-in-class P2P offering and some fintech partners. Like, that's a high-level strategy right there. And you want to do all that in 2 years. Okay, that's very doable. So how do you start executing? And the first thing is like, all right, how do you, what dollars do you put behind it? What vendors make it possible? Do you want less vendors in the door? Do you want more vendors in the door? Do you start with your core and see how far they can get you? They might, these cores are very incentivized to keep your core banking contract. So often, can sometimes give the digital parts for very reasonable pricing. I mean, we've all been through all that. So there's not really one question here, Jason. It's how do you start laying the groundworks for execution, which is start to deploy serious investment capital, start to allocate project resources, start to pick vendors in the hopes to get this thing done. Like, where do you start on that? And we can keep it high level, and then maybe I'll dive in a little bit on anything interesting.
Yeah. Well, you hit home on, know your destination, know where you want to go. Because once you know where you want to go, or once we knew where we wanted to go, we started laying our foundation from a technical perspective. We also, if anyone's interested in our best plan, we did execute that in May. So there's a live presentation of that out there, but it does go through and say, hey, we do want to hollow out our core. And what does that mean? Let's lay that foundation. Let's create the technology around it that lets us take APIs from anywhere and let us manage them ourselves. Data is huge. We knew we needed to execute on data. When you're bringing in a fintech, or whether you're doing digital marketing, or whether it's core data, we wanted it all in one place. So that was key. And then we looked at our journeys and said, how do we make that a success? What partners do we bring in to do so? So by laying down that foundation, it said, okay, we are going to deal with, and we're going to look for partners in the digital fields that can map right into what we've created. It's easy on us. It helps us kind of break away from our core a little bit, and creates a quicker turn to market. So you don't have to work with your core and do those one-to-one connections on and on and on and over, and kind of just plug and play. And I make it sound easy, and my digital team will probably kill me for saying that. But it's pretty much pop out, pop in. Well, you have a very defined business case and requirements document. We also go through a pretty thorough architectural review process and score our vendors, not only through the RFP process, but from a technology and a product set fit. How do they score out? So a lot of goes into it, and we are looking at multiple vendors and bringing them in. But by doing so, it kind of says, hey, here's the best fit for what we're laying out and what we're trying to do. And it's all documented and all that good stuff. Even if you choose the best fintech partner in the world and it does exactly what you want, there are things that happen. Expect the unexpected, I guess.
Yeah, and to add to that, a lot of hours of involvement, especially at the beginning, until as an executive you are able to delegate and involve the right people. But a lot of executive time really spent to participate and understand what the team is understanding, so that everybody's in the same place, trying to, from an operational standpoint or from a different channel standpoint, gather the information and really convey the right objective to the vendor, so that the vendor is on board with what is that we're trying to accomplish. So a lot of work hours, very intense process at the beginning.
Yeah.
And I think just to dovetail in there for everybody, we used a quote in a data-driven strategy podcast that I was on a while back, but it hits here. Plan for a marathon, not a sprint, right? So you can do small sprints. Plan for being agile. Things change on the fly. So I love that quote when it comes to that. It goes on data, it goes on digital. The two need to work together.
Yeah. I think my last question in this bucket of execution is how to measure success. And I get that we've set a path out, and obviously success is measured. Did we achieve that path? But there's zigs and zags and expect the unexpected, just like you just said. But at the end of the day, like, how a year from now, 2 years from now, 3 years from now, how should a bank truly measure the success of their digital initiatives, transformation initiatives? Again, this doesn't have to be digital. It could be, back end oriented. But regardless of whether it is, let's call it technology initiatives, how is success measured? And is it the same for every bank? Should it be different for every bank? I think that would be super helpful. And a second question just for you, Lucy, how did you measure it at an institution like PNC or Bank of America, where the scale is just, so large? I would love to hear about that too, so we can apply some of those interesting learnings to our banks. But, I'll leave that last one to both of you. And Lucy, if you want to start.
All right. So in larger banks, is everything is about percentage. So this goes for everything, and I'm sure there is many executives that are on this line that can relate directly to what I'm saying. So an implementation, a project is implemented, and now we look at participation. What is the participation? And do we have a 50% participation? What is our baseline of participation, and where we want to see ourselves? And where we want to see ourselves a year from now? And I won't even call it a year. It's more like a month to month, where we want to see ourselves this month, where we want to see ourselves the next month, right? And that's with the assumption that in a larger institution, you have already done all the legwork, people are trained, the message is being relayed appropriately, and we now just, we're now just engaging the clients or the stakeholders. In a smaller institution, there is the preparation piece that takes place. So and that preparation can take time. So the measure of success for us, it will still be a baseline of where we're going to be a year from now, taking in consideration all the preparation that needs to happen in between, so that our people are able to deliver, they are engaged, they are excited about it, and they see the benefit of what is that they are engaging clients with. So that's how we're going to measure our success. And we are measuring quarter over quarter, we are measuring month over month, but the yearly measurement is really what is going to count, because it is we have been operating through this transformation in a COVID time, so a little bit different than where we have been in the past, with all the issues that have arisen with that. So our objective is a year from now to be in a much better baseline than where we started from. And since it's a transformation, I will put a lot of work towards including the motivation for the employees. So all incentives, everything that is being created is created around engaging the employees and ensuring that that they carrying the message forward. We know that a year from now we'll be in a much better place than where we are right now from a baseline standpoint.
Yeah, and I'll kind of dive in a little bit more to that. I talked to the transformation office. I think that's the best thing in the world that we did. By setting our goals and milestones within the strategic plan, the best plan, we were able to grab those. Each executive and sponsors would work with the transformation office and define both date and monetary milestones based off of those drivers. The transformation office would hold bi-weekly meetings, and cadence meetings. They capture any sway. They really keep us on task. They work to define the KPIs, and they hold us to those, and they measure that output, and we report to them and the executives on a monthly basis. So there's a lot of work that goes on, not only from a communications perspective with our employees, like we spoke of earlier, but keeping us honest, measuring that success so we can report that back out to the street, which is fantastic.
Got it. Sorry, I lied. One more question for you, Jason. You're a technology guy. You are responsible for deploying capital, investment capital, to both front-end facing technology, but also back-end facing technology, right? Whether that's something that'll sit on top of your core, whether that's a data warehouse, whether that's a new tool to do X, Y, Z. How do you measure? I think Lucy talked about measuring those front-end stats, like percentage of adoption. Let's say we roll out a new feature, call it automatic savings. X thousand users, 80% use it, huge success. But how do you measure the success of back-end investments, things that will make the IT's team job more scalable, or the bank more scalable from an infrastructure standpoint? Obviously, it's a little intangible, but I'm sure it's not the first time you've been asked that question.
Yeah. It actually, a lot of it rolls right into other work streams and revenue streams as being an enabler. So when you're talking all those systems, on the back end, like I said, we have one pillar dedicated to automation, efficiencies, so that we can take our FTE time and focus that time on other things or strategic items that they weren't able to do in the past. Yeah, it's really a soft measurement, I would say. There's no formal measurement that I can put on that. Because we do have those rolling up from a revenue perspective. So those dollars are tied in, the expenses are rolled in, the efficiency gains are kind of soft. So while you don't normally see those, you do gain a lot in the lines of business as well as technology on the back end.
Yeah. And an argument I'm also trying to make too is these back end.
Nico, there is.
Go ahead, Lucy. Sorry.
Nico, I'm sorry. There is a return on investment in each thing that we do. So we calculate the return on investment, whether it's a technology enhancement or a service enhancement. We calculate that, on how it will impact, how the service will impact the productivity, etc. And so each thing that we do is a return on investment calculation. And that's how we assess then our success going forward.
Yeah, great. Well, great. I do want to invite Naomi back on stage. Naomi, if you want to, I think we have time for one or two questions from the audience, if that's okay. And then we'll let Jason and Lucy get back to their day jobs. I'm sure they would love to stay on and talk to everyone all day, but we want to be respectful of their time and obviously everyone else.
Sure. We actually have a couple questions from the audience. So I think this is for Lucy or Jason. What initiative did you undertake that gave you the biggest business benefit that surprised you the most?
Lucy, do you want to take that one?
That's yes. So because we have had a lot of initiatives, I will say this. We had naturally a branch optimization. We know what we were getting out of that. We did a product consolidation to make it easy for our employees to be able to discuss products with our clients, and at the same time eliminate the confusion that was coming from that. That reduction actually create a great enthusiasm from the front line and their ability to really be more certain and confident as they were talking to the clients about the solutions that we were to offer. And so we saw actually a lift in offering to our clients right after we did that product consolidation. But another piece, as we evaluated, through our productivity was, some of the vendor services, and I'm really not at liberty to discuss which one, but they will bring us the most productivity and service for the clients, because our major component here is the ability to really service the clients with what they need, and have that ability to our fingertips. So that was probably not well received from the front lines, more because of lack of education. So we had to undertake a process of real education for them to understand the benefits to the clients, the benefits to themselves. And so initially it was surprising for me, but as we went through the process of education and explanation, things changed drastically. And so and the team became very, very excited about it. So I would say through this process, as we have gone through the path of transformation, there has been things that I did not expect to produce the results that they produce. And there has been things that I expect to produce excellent results from the beginning that were now well received. So at least at the beginning. So with each one of these things, my thought at the end of this experience has been that education is paramount. The assumptions are not assumptions are not welcomed. So the assumption that this thing will be well received is not acceptable. So each piece has to be backed by full education and engagement before rollout. So those are the things that I've learned in my experience. Jason.
Interesting.
Yeah, and selfishly, I'll tack on here that, and I'll put a little plug here for NARMI, because the online account opening solution we had prior to partnering with NARMI, we didn't realize how bad that was and what type of impact that would make on, how many new online accounts we would bring in, not only because, it was so much faster, so much less complex, but we also saw a huge drop in fraud rate because of it. So
Yeah.
a lot of that was pretty eye-opening for me, and I personally keep an eye on those accounts every day.
Yeah, interesting. Yeah. And this is kind of a good segue to a question for Nikhil that came from the audience. I think somebody is curious in the audience about NARMI's plans for the commercial account space. A lot of times we're talking about retail and consumers, and I don't know if you could say anything because this may be top secret, but that was a big up for the audience.
Is that commercial account opening? Is that what they were talking about?
Just the commercial account space in general.
Okay, great. I mean, 1000%. I think business, our view at NARMI, which I would hope represents my personal view as well, is if you look at the investment in fintech the last decade, it's been so consumer heavy, right? Every direct-to-consumer fintech company, Chime, Robinhood, Stash, Betterment, you name it. You've got these mega banks dumping billions of dollars into marketing spend to attract a consumer. It's all gone towards consumer. But the innovation is lagging on the business side, whether you define that as a transactional experience, so actually helping a business grow and retain those deposits and add more users and use wires and send wires internationally and all the things a business needs to do, whether it's the account opening side. We've brought down the retail account opening experience to 2 minutes and 13 seconds. You cannot make that faster. In fact, I would argue you're making your bank more dangerous by making it faster. You can do that same type of automation in about 5 minutes for a small to medium business, hands down. My personal view and NARMI's view is for a heavy commercial client, $50, $100 million of revenue, you're just better off doing that high touch because they're just going to be so complex that I do think a human is required there. So I do view the automation of that account opening experience to be a little harder. And you could make a solid argument that NARMI is definitely ready and willing to serve all of those use cases that I just mentioned. We've got a business digital banking platform that's in the market today that's doing really, really well. We're consistently innovating on that. We're adding a ton of new features every single quarter on that, whether that's more robust entitlements, cash management tools, a seamless login between the consumer experience and the business experience. So there's a lot I could talk about here. I want to obviously be mindful of our roadmap and protect my product team a little bit. But needless to say, view business as a massive, massive priority for us, not just for 2022, but quite frankly, for the next decade. We literally have a 10-year roadmap for business banking. Now that will obviously change, but there's no shortage of things we can do to make the commercial and business digital experience a lot better. And also, last thing, I don't think many people are working on this right now. I think the functionality is there in the market, but I don't think there are people working day and night to really beautify the business banking experience for businesses across America. I think it's very much, hey, you have the functionality. We know you don't value user experience, so just keep using it. I think that's a really dangerous thing to just accept moving forward. Because don't forget, behind every business, that employee is a consumer. So, and if you saw the case study with Slack, which started with SMB, but then jumped to enterprise fairly quickly, it's because all those enterprise employees at Coca-Cola, HP, Google, they all value really good user experience. So why wouldn't they buy the best user experience product? And you think you're going to see the same thing with business banking the next 5 years. So anyways, that's my 2 cents, Naomi.
Okay, thank you, Nikhil. And one last question here. I think this was for Lucy. We just have time for just a quick last one. Were the milestones you talked about that you're looking for at the bank tactical milestones like implementation or strategic like KPIs?
They both. So they strategic milestones. So yes, we have some specific expectations that, and we look at specific milestones that we need to achieve. So some are KPI milestones, but some are also in they're not measurable from a KPI standpoint, but they measured by motivation, inspiration, and engagement. So those milestones have different background. They come from creating that environment for the employees and even for the clients to feel so completely engaged and inspired that they select you as the employer of choice or the bank of choice. So some of those are milestones that we're looking to achieve as we move along the transformation with different measures that are not KPI measures.
Yeah, and Lucy does wait on me a little bit for getting some of that foundation built in order to hit her revenue milestones. So the technology rolls right into her milestones and KPIs. So we don't have much going on in the IT world, and don't have to worry about Lucy slap us on the wrist, right, Lucy?
Right. Very ambitious, it sounds like. So thank you so much, Nikhil, Lucy, and Jason for their time today. As a reminder, you will receive the recorded version of this webinar within 24 hours, and we will also post it on bankdirector.com. So thank you for joining us today.
Thanks,
Bye.
everyone. Have a great holiday season. Take care. Bye.
Bye.
All right, thank you.